Hello traders, welcome to Ultimate Forex Trading channel. I'm so glad to welcome you back again. If you haven't subscribed, please make sure to subscribe and turn on your notification because a lot of wonderful content are going to be released on this channel. So today I'll be teaching on Forex market structure. And I believe at the end of this, your trading career will be richly empowered. So let's dive into market structure now. Before we move on, I want us to define some terms related to market structure. Price action. Price action is the change of price over time, or in simple terms, action of price as the name implies. So this is what the price is doing at a particular time, making higher highs, higher lows, lower highs, lower lows. As it says, it is the action of price. It is what the price is doing in a simple term. Market structure is the behavior, condition, and current flow of the market. Example, if the price action is forming higher highs and higher lows, it is forming bullish market structure. So what this means is that market structure work hand in hand with price action. So we can also say market structure is an accumulation of price action over time. The next one is trend. A trend is a consistent direction of price movement over time. So when price has been moving over time, we can refer to it as trend. In this case, it can be bullish or bearish trend. Everything that exists do have some advantage and it has its own limitation. So we'll look at the advantage and limitation of market structure. Market structure has the advantage of defining when and at what price to buy and sell through trend lines. It will help you in deciding your entry, stop loss, and profit target. So if you're deciding your entry for your trade, your stop loss and profit target, you have to put market structure into strict consideration, and it shouldn't be based on your assumption or based on how you think you can put it, but such decision should be influenced by market structure. Limitations. The market can do anything at any given moment. Uncertainty of the market must be embraced and accepted. Just as Mark Douglas said in his book Trading in the Zone, The 5 Fundamental Rules of Trading, one of it says that the market can do anything at any time. So you shall accept that sometimes the market can behave in an uncertain way because it is a game of probability. There's no absolute strategy, there's no absolute formula of trading the market. What makes you to be profitable today may make you to be a loser tomorrow. That is why you are a professional risk manager as a trader. So the uncertainty of the market has to be embraced, just as I've said, and know that market structure has its own limitation. This is generally to everybody in the market, be it a professional trader, intermediate, or a beginner trader. Market structure has limitation. The only thing is that professional traders has accepted that yes, market structure has limitation. So that is one of their difference with an amateur trader who just come and thinks once he know what price action is, it is absolute. Types of market structure: bullish trends or uptrends, bearish trends or downtrends, ranging market. bullish trend or down uptrend. This is when price is going up, making higher highs and higher lows. Bearish trend or downtrend. This is when price is going down, making lower highs and lower lows. And also we have ranging market. This is when price is trading within a defined range, making no willingness to move up or down, thereby making equal highs and equal lows. So this is what it means to have such types of market structure diagrammatically. So this is bullish trend, and as you can see, it's making higher highs, higher lows, higher high, higher lows, higher high, higher lows, higher high, higher lows, thereby moving upward. And if you draw your trend line on an uptrend, you will notice that it is having a diagonal support and also horizontal support, right? A bullish trend has diagonal support in a retail world, and also it has horizontal support that it always come back to mitigate the support, right? So ranging market, the price is trading within a defined range and is showing no willingness to move up or down, making equal highs and equal lows. Also bearish trend, the market is making lower highs, lower lows, lower highs, lower low, lower highs, and is having also a descending pattern, thereby having a resistance, also what we call diagonal resistance, and also have a horizontal resistance also. So you can see this is resisting it horizontally, horizontal resistance, also have a diagonal resistance in this bearish condition. So this is what it means to have bullish trend in a real market chart. So you can see it's making higher highs, higher lows, higher high, higher lows, higher high, higher lows, and still maintaining its diagonal support and also horizontal support in this case. Right, so I believe you're enjoying it. So let's move on. In bearish trend also, as you can see, the market is moving down and it's having diagonal resistance, so having horizontal resistance. As you can see, you draw your resistance line, the lower lows actually meet up with the these lower highs. Ranging market, also in real market condition, market is trading within a defined range, is showing no willingness to move up or down. We have market structure shift or reversal. This is when price change direction, when price has been moving in a consistent direction and decided to move opposite its current or original direction. We refer to it as reversal or breaking market structure. As you can see, when price is going up, it's making higher highs, higher lows, higher high, higher lows. It kept respecting the lows, but kept breaking the highs. It kept breaking the highs and kept respecting the lows. But at a point that the low refused to be respected by price and it got broken, it refers to as break in market structure. This is breaking market structure in bearish condition, and also this is break in market structure in bullish condition. Price was always respecting the lower highs but kept breaking the lower lows until it broke the last lower highs. It is referred to as break in market structure or shift in market structure or market structure shift, as in this case. So this is what it means in the real market condition to have breaking market structure, price making higher highs, higher lows, higher highs, higher lows, higher highs. As you can see, this it fails to make higher highs again here, thereby it gave us lower highs, right, before breaking the structure here. So it gave us PMS here, and this is what it means in bullish condition also to have bullish reversal rock market structure here. Retracement. Retracement is when price moves back into a recently created price range. It can also be called pullback. So when price is moving up, coming back, it moves up again, then it comes back again. So from this range to this range is referred to as retracement. Retracement is when price retraces into this range, an already created price range, then price reprices into the range before it moves up again. So from the last higher highs that the price printed to the last lower highs, higher lows that the price printed is referred to as retracement. From here to here is referred to as retracement, or it can also be called pullback. This is what it is. Price moves down, retraces, moves down, retraces, moves down, retraces, moves down, retraces. Expansion occurs when price move away from level of retracement or ranging market. So when price retraces, as I've explained, price expands. So this movement from the level of retracement to here forming another higher high again is referred to as expansion. So expansion starts when the retracement ends, price expanded from this range to this range. This is referred to as expansion. This is referred to as expansion. That is expanding from this level of retracement to the new level that price form another higher high. It refers to as retracement. Or moving from a ranging market. Price can actually expand from a ranging market also. When price has been trading in a range and suddenly price expands, thereby causing breaking market structure. So this is it. Price is ranging and price expanded. This is known as expansion. So thank you guys for watching this video, and again I will release a next video of what you should do or what you are expected to do when price is retracing, or when price is expanding, or when price is consolidating or ranging, and also reversal. So make sure you subscribe to this channel and on your notification for you to get notified whenever a new video is released on the channel. And also don't forget to give it a thumbs up if you really like this video. Thank you guys, and I wish you good luck in your trading.